Well, welcome to my session at the Modern Retailing Conference. My name is Carrie Wise. I'm the Chief Marketing Officer for AutoFi, and I've been working in the industry for 25 years and have so much passion for this business and this topic I'm going to talk about today, which is the showroom is the new digital frontier. I want to talk about how we can think about technology, not just in terms of the online and the digital retailing experience, but what happens in the showroom? How do we arm our people to be more efficient, move faster, and ultimately make more money using technology? And so we're going to jump right in. And I think it starts, and where I want to start this conversation is really just to give you some background on Audify, because a lot of what I'm going to talk about today is going to draw from the insights, the consumer experience, and what we're seeing in terms of how consumers engage with our dealers and our technology, and also what are we seeing in terms of the best dealers and their outcomes. So when you look at the Audify platform, we are a sales and finance technology, and we have what we would call traditional digital retailing in our industry, which is our solution sitting on the dealership's website or enabling them to remotely sell. Maybe it's someone over the phone where we have to send them a link to invite them into the Audify experience. What sets us apart from a digital retailing standpoint is what's in our name, the FI. It's that finance experience. And, I often say that you can't transact without financing. And so our bread and butter is the ability to return an instant firm offer of credit from multiple banks in our digital retailing experience and also in our showroom experience. And then on the other end of the spectrum is a solution that we just launched this year, which is our showroom experience. And what we found is that while digital retailing is critical, obviously, to a dealer's success, the reality is that most customers are not going to purchase a vehicle end to end. It's less than 5% of transactions. The majority of customers are going to start that experience online and transition into the showroom. And the reason why I wanted to talk about the showroom being this new digital frontier is that we've invested a lot of time on our website and in this online experience, to the detriment of what actually happens in the showroom. There hasn't been a lot of innovation in using technology to improve the negotiation experience, the friction that we see between the customer and the salesperson. And so what we tackled this year is using Audify's technology to arm people to have a smoother negotiation and finance experience, to arm our sales teams to be able to talk numbers quicker, and really to build trust with the customer. And what we've seen is that has also benefited dealers in terms of profitability. So let's talk about the problem that we see in the industry. When we talk to dealers, most dealerships, I think the stat is 90% of dealerships would tell you that they have adopted some form of digital retailing. But we still see some of the legacy problems exist in the business. So when you look at Cox Automotive, they've done their buyer journey study. And back in 2018, it showed that the average customer spent 14 hours shopping in online before they went into a dealership. Yet when they got into the store, they still spent 3 hours to actually transact at the dealership. So 14 hours before on their own at home, and 3 hours, 187 minutes in the store. And with this adoption of digital retailing, I think the promise of digital retailing was it was going to be a much more efficient process, that we were going to be able to sell more cars in a quicker time because the customer was going to come in ready to buy, right? And so we weren't spending as much time, and that has not been the case. We're still seeing customers spend nearly 14 hours shopping on their own at home, but you can see that we've only improved the time in the showroom by only 15 minutes. It's still taking nearly 3 hours to sell a car. And so the promise of digital retailing has not yet been realized. The other promise of digital retailing was that salesperson productivity would improve, that we would be able to get more out of our salespeople because the process would be much more efficient and smooth. And that is not the case. When you look at NADA, back in 2016, the average new car salesperson sold 9 cars. And you can see in 2023, it's still 9 cars. And as we all know, the payroll expenses to run a dealership have increased significantly. So we're not getting more out of our people. And so we wanted to solve for that with AutoFi. And what we did was we wanted to go into the stores and truly understand what were the hurdles, what were the bottlenecks that were stopping us from being having a much more efficient process. And so we sent our very own Joe St. John, he's our chief customer officer, into the stores last year. And this is when we were piloting our showroom experience. And he actually sold cars for 2 months. He's a former general manager and he sold cars, he worked the desk. And what we learned is that there were still these legacy issues that still exist in the process. Number one, that managers had to make a lot of decisions. And in some ways, there was decision fatigue, decision overload. We were making a lot of manual decisions without necessarily relying on technology. We also saw that time killed deals and it killed profit. And that's specifically in the negotiation, not only getting numbers out to customers, but that back and forth. Part of that was that there was a lot of friction and fighting and distrust between the customer and the salesperson, and that still remained an issue. And lastly, we have this new generation of salespeople, whether it be Gen Zs or this COVID generation that just started selling cars in 2020 in an environment that didn't really match reality, the reality of what selling cars is today. And so dealers were still grappling with these issues. Decision fatigue, I mentioned, was one of them. And what we find is that our managers are having to make a lot of decisions. In fact, we put more on the plate of our sales managers than ever before. Not only are they having to quarterback the sales floor and work deals, but they're often having to appraise trades or even having to get approvals for customers. And so what we find is the more decisions we have to make in a short period of time, the lower the quality of those decisions. So, how do we solve for that? One decision that we see that management often has to make is what lender to send this customer to. And so we have this particular scenario of a customer who's buying a 2021 Elantra. You can see, it's 16,000 miles on it. They have 1,200 in equity, a 689 FICO score, and you can see all these qualities of this particular deal. And so the question mark is, who would we send this customer to? Which bank will we send this customer to? And as you think about it, we should all agree, or hopefully you agree with me, that there's a good and a bad callback. There's a ranking of good and bad callbacks amongst these banks. And so think about it yourself. Who would you send this to? Well, when it comes to AutoFi, we look at millions of transactions in any given moment. And what we do is we work with our dealerships to understand their preferred banks. We work with the banks and understand who they're going to approve. And we use the dealership's preferences along with the customer's profile to present the three banks to the customer that make the most sense for the dealer, but are also going to result in an actual approval. And so when we pulled this, at the time we pulled this particular deal, these were the three banks that were the best callbacks that were beneficial in terms of approvals and beneficial to the dealer. But if we would have pulled it a month earlier, it would have been these three banks. And so you can see that things change, that the bank policies change, and what they approve today might change 3 months from now. And even with the best management in the world, it's impossible for a manager to stay on top of every bank's policies and what they're going to approve or not approve, what's beneficial for me from a market standpoint. And so technology allows us to stay on top of this without having to make individual decisions. I consider it almost optimizing your decision making. The other problem we see is the waves of customers that come in and out of a dealership at any given time. Think about it. Do customers come in one-on-one, one person on the hour, or do they come in waves? And the answer is waves, right? At one point, the dealership is completely empty, and in the next moment, we're drowning in customers. And that is really when things get real. We have a few managers working the desk, one's out there bidding a trade. You may have two or three salespeople in line waiting for numbers. And if you're the unlucky salesperson, you're the third or fourth in that line to come back from the test drive. You drop your customer off at your desk, and now, how long is it going to take for you to get a first pencil out to your customer? When I've asked this question of hundreds of dealers, the typical answer is 15 to 20 minutes on a busy Saturday to get a first pencil out to a customer. And I want us to think about that for a second. The customer is coming back from the test drive, their buying temperature is at its peak. They are licking the paint off the car. And what do? We actually slow the process down. We sit them down and make them wait. And then what ends up happening is while that customer is sitting in the box and they're waiting for the numbers, the deal starts to die a little bit. We are psychologically programming them to talk themselves out of the deal, right? They think about, well, maybe I should have done some more research when I came in. Maybe I should have brought my brother or my aunt or somebody to help me with this deal. Maybe I should have got pre-approved before I came in. And so this customer now is in a position of wanting to leave. The salesperson is now trying to keep that customer from leaving, and in some ways is leading with desperation of, please stay, maybe I can get you a better deal. And so this whole concept of time kills deals and profit, that's the real world scenario that happens every day, and why a customer wants to leave, and why a salesperson ends up giving up money to keep them. This is exasperated by this new generation of salespeople who are often in the new generation. They are digitally savvy, they are digital natives that have never really had to work with pen and paper. And so we're arming this salesperson on the left who's all digital with paper and pen. And I know a lot of dealers aren't using the Foursquare, but many or most are doing printouts from their DMS with a pen. And we're arming this salesperson on the left to have to go and negotiate and fight and battle with a traditional customer. Or the opposite. Maybe our salesperson's the traditional sales guy on the right, and we're having him go to battle with a pen and paper with a new Gen Z customer. Either way, it's a mismatch. And as an industry, we're arming our people with outdated weapons. We have the perception of automotive and the dealership and the negotiation experience as this picture, right? I think most dealer principals think of their process as it's a happy customer. It's one of the most important purchases of your life, and this is how you feel. However, this is what customers think about sometimes, right? They think about that old school salesperson. They think that this is going to be a painful process. And so we have to come to grips with, no matter what the reality is, what the perception is of the customer. So let's talk about some solutions to solve for this. How can we use technology to break through? And what we looked at is the results across hundreds of dealers that have adopted AutoFi's showroom technology into their experience. And I should point out that these aren't just one person, one price dealers. The majority of these are traditional dealers that are trying to expedite that negotiation so they can make more money in F&I. And what we have found is that these dealers have expedited the process, with an average time of 28 minutes from first pencil to lender approval. So to lock in that deal, they're immediately being able to present numbers. We've seen them see more approvals with a 77% lender approval rate, and we've seen them have a higher profit. This number has actually changed since we've last presented this, but at the time we pulled this, it was $600 more back in profit before and after using AutoFi in the showroom. So $600 more incremental profit. That number has actually risen to $700 in the last time we pulled the data. And so for my first recommendation is we have to figure out, how can we automate some of these decisions that we're making every day? It's not replacing somebody, but it's helping me make my decisions faster. It's guiding me and helping me as a manager. And so I call it automate for optimization. We're trying to get optimization in the process. When you look at Steve Jobs, he's a great example of optimizing decisions. He wore the same outfit every single day. Why? Because he wanted to spend his time on more important things than picking his outfit. He wanted to use his creativity on his work at Apple and his work and other things versus picking an outfit. I always think about Google Maps as something I use every day to help me optimize decisions. See, I take my kid to soccer practice 4 to 5 days at the same exact field, yet I still pull up Google Maps every single time. Why? Because I live in Southern California. There's a lot of traffic. And Google Maps knows in real time any car accident, any police incident, and it's going to reroute me. It knows more than I know from a real time standpoint. And so we should think about technology in that same way. It should not replace us. It should actually be an input that guides us and helps us optimize some of these decisions. And we see it from a management standpoint as well, that our managers are taking their strategies. Maybe it's when it comes to lenders and what lenders they want to work with, what scenarios, and we're working with them to set up a custom automation of their lender routing so that they don't have to take every single deal and work it from scratch. Those run-of-the-mill, down-the-middle deals, they're actually using Audify to help them determine what are the best banks to send to and present that directly to the customer. And it's yielded better results than when they've had to do it manually. When we look at the Audify lender routing, on average, we're sending it off to that app off to 2.7 lenders, and we receive back about 2.1 approvals. When you look at a dealership who does it manually, they're actually shotgunning it out and doing a lot more guesswork to more lenders, 3.3 lenders, with actually slightly less approvals than our intelligent lender routing. So automation oftentimes helps us actually get better, more consistent results. The second part is that we have to find a way to make that negotiation deal process more efficient. And that starts with actually empowering our salespeople to do more. Now, this might scare some of you and say, no way, I would never let my green pea salespeople do stuff on their own. But what we have found is technology, particularly with guardrails, prevents them from making mistakes, but lets them move faster. And so, how can we do that? We are a lot of times what ends up happening is our manager is actually setting up the deal in Audify using our desking while that salesperson is out on the test drive. And so when that salesperson comes back, instead of having to wait in line at the desk, they're giving that salesperson the thumbs up to immediately present numbers. And what we like to say is that the salesperson can't color outside the lines. They're playing with the customer's money, not the dealership's money, meaning we can allow the customer to tell us what their term should be or what they prefer to put down. All of those things could impact the payment, but we're not impacting the profitability. The salesperson can't discount the car, for example. That all still has to go through the manager. And so what we find is this is a win-win because customers are oftentimes payment oriented. And so allowing them to play around with finance and lease and terms and down payment makes them feel good, makes them feel like they have at least the perception of control without actually giving up control of the deal. So we can instantly talk numbers. If the customer wants to compare finance versus lease, I don't have to get up as a salesperson and go back and forth to the desk multiple times. This allows my manager to focus on the hard deals, the deals that they really do have to get involved because their credit's bad or maybe the ratios are off. And instead, the run-of-the-mill deals, our salespeople are empowered more to work those deals. And I mentioned management guardrails are really important. None of these things can happen without measures in place that prevent salespeople to color out the lines. So, for example, let's say a credit score is below a certain amount. Our management can set up rules that say, look, if a credit app is accepted and this credit score is below a certain amount, I don't want that pushed through the intelligent lender routing. I want my manager to have eyes on this particular app. And so we can set up those kind of rules that say, okay, these deals can run through the system and these deals must be taken off. And a salesperson can impact this part of the deal, down payment term, but they can't discount the car, for example. And these are the kind of guardrails that have helped us and helped our dealers retain profit. We also hear a lot of objections about, well, my green peas can't handle it. And it's far from the truth. What we have found is that in some ways, the green peas, the Gen Zs, the new people to the business that haven't been around, embrace it even more. It helps them to have some level of consistency in their experience. This guy on the right is a fairly young salesperson. And one of our trainers worked with this particular store and couldn't believe the F&I products that this new brand new salesperson was able to sell in this deal, simply by allowing the customer to be more involved in that experience and pick and choose. We also see this salesperson on the left who sold 40 cars at Hello Subaru. He sold 40 cars in 1 month. And 2 years before that, he was, at an Amazon warehouse, not even in the automotive industry. And so we have seen productivity lift, and we've seen it work not only for our experienced salespeople, but also for our new salespeople. And the last thing I want to touch on is the concept of trust. There is a trust gap that still exists between salespeople and customers. And how do we bridge that trust gap? And I oftentimes like to say that people trust a screen. They trust technology more than a person. The best example of that is Uber. The truth is, if this man on the left was to pick me up and offer me a ride, there's no way I'd get in the car with him, with this stranger who I don't know. But the reality is, if he came through the Uber app, I'm getting in, no questions asked. And so oftentimes in our everyday lives, technology is what bridges this trust gap. If you look at banking, like, I'm not going to give my social security, I'm not going to deposit any money or give money to a human being. But if I was to do it through an app, I do it all day long. If you ask me for my social security number on a piece of paper, I'm saying no. But if it was through an encrypted technology, I'm absolutely putting it in. And so people trust technology. And as an industry, we haven't taken advantage of that as much in the negotiation. We're still very much using paper and pen. There's also the matter of choice. And what we know is that when consumers have more choices, they're much more likely to move forward with a actual decision. And bank choices are a good example of that. What we find is a customer will come in and say, I refuse to pay anything more than 10% interest. And so as an industry, we oftentimes just put one lender offer in front of them. Hey, I was able to get you approved through Ally, and here's the details of that approval. But what we find is that when you show consumers three choices from banks that they trust, now all of a sudden my expectation of not having a loan that is more than a 10% interest, when I see three and I see that, wow, my expectations are out of whack. And a lot of times what we find is giving the consumers choices helps them make more realistic, or actually have more realistic expectations. And so now I'm looking at these three offers, and you know what? 15% actually doesn't sound bad anymore relative to what I was expecting when I first started. At the end of the day, we have upgraded hundreds of our dealerships onto this showroom experience. And overall, we've seen consistent results. One, they are actually using it in their experience. On average, we see an 84% usage, in terms of 84% of our dealers' deals are going through AutoFi. So they're using it whether they're a one person, one price store or a traditional store. The time to transact has shrunken significantly, 74% shorter transaction time. Profitability has increased dramatically. In this particular dealership case study, we have seen that this particular store is seeing an $1,000 incremental profit. I mentioned the average of around 700 for our stores, but this store is seeing $1,000, and productivity has increased, with this store seeing a 48% increase in sales per salespeople. So we are not only selling cars faster, we are getting more productivity out of our people, and we are maintaining and actually growing profit in the process. This is the way, this is where the industry should be going. And I hope that we will look beyond just digital retailing as this widget on our site and as this instead look at it as this comprehensive integrated experience. It's not just the online experience, but more importantly, empowers our showroom sales experience in every touch point with the customer. So here's my information. Feel free to reach out to me. You can also scan this QR code and get more information on Autofy and our showroom experience. And I want to thank the team from Modern Retailing Conference for having me as a speaker.